looks like we're ready to go. Looks like we're ready to rock and roll. Only 3.5 minutes into the hour. Here we friggin' go. All right, welcome back to the Cosas Verdes channel, where we're going to cover in live streams price action of Bitcoin, try to make a plan for the week so that we know where we have pivot points and probabilities of when Bitcoin is going to do something besides being going sideways. And as opposed to, so for new viewers or anybody watching this who is new, instead of me making a guess and try to justify that guess, I will instead give you pivot points on when something becomes more probable or very tradable edge. And but as of now, if you want to look behind me, I will put my Harry Potter cloak on. Boom. Bitcoin still going sideways. Look at this. Not a whole lot to do, but even though Bitcoin is boring everybody to death with about 130 days of sideways price action without any resolution, although that is happening, take a look. It's almost to the end. Something's got to happen. And this purple line right here, even though my Cosas Verdes stuff might be in the way, but this purple line behind me, that is when the month of October closes. So in very general terms, we have a few things to think about. Let me put my Harry Potter cloak back on. It's possible that when Bitcoin breaks out or down from this triangle, that will spell continuation somewhere around this line. You also have the possibility of a trap up before the other way happens, or a trap down to this origin line, perhaps even as low as 16.8 before it then goes up. All right, so let me put a couple price tags on. And there are a couple ways you could play this or interpret this. So let's say between these 2 points here for a bull trap and right around here for a beautiful bear trap. So if one were to see this break out and you are long that, around these 2 points would be a good time to potentially begin taking profits and moving stop into well into profits, right? Maybe not flipping short at that time, but in doing that. Or if you play this to the downside, conversely to that or inversely to that, you would want to begin moving stops fully into profit on your shorts and or taking profits for likelihood that it does bounce from here to some degree, even though it could just get come back up to 18K at the bottom, get rejected, and then head down even lower. And so there are a couple ways to play that as if it were continuation. Stay safe even if it's a trap. Does that make sense? So if it breaks up and out, you're going to have some decent sized wiggle room. So let's say from the top of this, I mean, hell, to 21K, that's a 7.5% move. That's more than enough for me to trade. I like to trade 2% move, really, with this sideways choppy action, right? So even if it is a trap, you can trade it as if it were continuation very safely and profitably. And this is not financial advice. I'm not a financial advisor. I'm letting you know what my thoughts are. So let's take a look at some pivot points and see if anything's new. But what I can tell you, by the end of this video, I'm going to show you a chart that you won't see anywhere else on the entire internet, because I made the chart, but it might be among the most important charts of all of crypto. So let's go get some friggin' Bitcoin. How boring this is. All right, so boring looking. Let's jump into this chart. I'm going to start off by letting you know from a micro time frame perspective. And again, these are the levels that I'm tracking on my live chart, my live Bitcoin stream chart that I have available to all of my Discord community, both tiers, and my Cryptillion, the higher of the two YouTube tiers. So what I do here is I try to let folks know just pretty much everything that's in play. And what in play means is those are micro pivot points where if you go down to it, you could get a bounce, or if you pass a level and go up to it, then you're going to hit your head on it. Or if you just go up to a level, then that's going to be resistance. It's pretty much, it's everything in play that are the bumpers. So if you imagine a pinball machine where the ball goes and, you know, the little things that you got to hit it with. If Bitcoin price is the ball, these are all the bumpers, right? And I usually am pretty accurate with identifying what actually is in play and what will move price one way or another, even if it's just a little hesitation on micro timeframes or not. But I'm going to zoom out just a little bit more so you can see what is more immediately in play. And I would say less than that. So most immediately in play over the next day or two is everything that you can see on the screen right now. Perhaps we could take off the daily closure. But we have a trend line from the highs of October 4th going back. See that? So this is very, very, very much in play. It's what a lot of people are staring at. The daily 21, the daily 10. If we zoom in to the 1 minute chart, we can see that it's clearly partly what's in play. This is a 1 minute chart. Hit the October open candle, failure rejection pattern on the daily 21. Come try to base out on the orange line or the daily 10. Get rejected again, breakdown from the October open, went below the daily 10, spiked back above the daily 10, got rejected by it. So like all this stuff is what's in play. And if you want to put these items on your chart, it would probably be a fantastic idea. And it's very possible everything on my chart right here is everything that will remain in play. Like I would almost guess that over this entire week that Bitcoin won't go off this screen. Like that's a pretty probable scenario. So if you literally just have this stuff on your chart, it might get you a whole week. As weird as that sounds, and as unfortunate as that sounds, because it's going to mean a lot of boring, that could be the case. And my main guess from my Monday video on October 17th was sideways price action with a possible bull trap up that's closer to 21K and change, and then break down out of the triangle perhaps in November or around the monthly candle closure just after. So that's my main guess. And so from a micro time frame, so that's a midterm time frame guess. A micro time frame, I mean, this kind of supports it. It looks like it's going to stay within this area for the next several days. And if you want to envision this a little more easily, my main idea is that since the October open, the October monthly candle open is essentially the battleground right now. And you can see that we are, we're more than halfway through the month. So a lot of times when that happens, you will see that even through the end of the month, there is still the battle for that line. And you'll often see in the last 1 hour. So that 1 hour is always at 7 p.m. New York, going to 8 p.m. New York, right? On the last day of the month, whatever the 31st falls on, whatever day, even if it falls on a weekend, it doesn't matter. A lot of times Bitcoin at that last hour, if it's above, it'll fly down to it and then close somewhere close. Or if Bitcoin price is below it, that last 1 hour, an hour and a half or so, it'll fly above it and close, close to it, either above or below, to make, to essentially, like, it could end up being a doji candle, right? And if you go on a Bitcoin chart and just look at the monthly candles, anytime you see a doji month, a really thin body candle, that's often what happens. A lot of times it goes down to the last hour, and if you expanded that month down to the 1 hour time frame, you'll see that a lot of the month there was a battle exactly at that line, and this is cooking up to do the same. Because we have a descending triangle and a stock market that has been making regular lower lows on price, both Nasdaq composite and S&P 500 composite, I would say that there is a much better chance that Bitcoin breaks out of this triangle or breaks down from the triangle sometime just before the October candle closes or sometime just after November candle opens. But then again, you got to watch out for that bull trap up to 21K that I talked about at the beginning of the video. But to get you through the rest of this week, or till Friday, everything right here behind me, it easily could get this. So if you're a new viewer, this is when you pause the video and you go put the stuff on your chart, try to emulate what I have. And if you are not sure how to put on daily EMAs, you can go to indicators and you look for the ones that are MTF EMAs, and you could mess around with them. They all have similar functions. All right. And since Bitcoin is moving pretty much sideways, I would say that a move up to 20K. So now we're going to go over the when probabilities flip, right? To perhaps hit the top of this screen or the bottom of the screen. Because right now it looks like it's just going to stay close to the October candle. So let's make October candle as our middle point. So if you're close to here, then you don't have a great edge either way. Make sense? So we're kind of close. Since we're under it, yeah, it's a little bit more likely that 19K will be hit before 20K up here, just because price is under it. However, the probabilities begin but it's still close to 50-50, right? And for every, I guess, for the lack of a better, for every $10 above here, that slightly increases the chance that 20K will, the move up will be hit. But when do you get a tradable edge? So a tradable edge up to 20K and perhaps farther, up to the top of the bigger triangle that I showed at the beginning of this, is I wouldn't just say you have a tradable edge right when it peaks its head, right when Bitcoin gets above this line here, which the price is labeled here, roughly 19,380. Rather, it's going to have to do with this trend line formed from the October 4th highs down to the other spikes up that we've. So this is October 14th. And I think what might happen here is when you'll have a tradable edge, Bitcoin will both get above this, come back and land and make a higher low to this, and then start wiggling up and get back above this. That is when. But it's only after you stick it sticks its landing here or on this. So you need to stick a higher low landing and then start moving up. And it's at that point when it's then moving up after finding support, I think you have a tradable edge to the upside. Now, that is different than price going above this and just going straight to here. I don't know if that's a tradable edge in that exact moment because there hasn't been the retest yet. Does that make sense? So it'd have to go above, come back, use that support, and then start working its way up at that moment. So let me draw this out. So at this moment right here, I wouldn't like that. I wouldn't like that edge. I would want to see it come down, either stick a higher low here and work its way up, or stick a higher low there. Something to that effect. And when you start getting, so if you were to zoom in, like on the 5 minute, after you see either it stick its landing on this trend line or on the October open candle, once you get 5 minute uptrend or a 15-minute candle uptrend and you see a higher low and then it starts attacking the most recent local high, at that moment right here, so this is the exact moment right there that I would say there's a tradable edge to the upside once it gets over this high here after sticking its landing on these two items. Make it sense? Right here. Not here. Not here. Not here. But once it gets over the most recent local high. And that's when you have a tradable edge up to 20K. To the downside, I mean, it's already so close to 19K. I don't know what the risk. I mean, you got to look at it like this. The risk to reward ratio is not very good. I mean, you got a 1.5% move down. So even if you did get a tradable edge to the downside, I mean, it's not that much. So I wouldn't favor this as much because I don't think this greater triangle is going to break out or break down, anytime super soon. Because SPX and stocks had a pretty good, fairly good day, fairly good closure. So I don't see this breaking down. So if Bitcoin goes down to 19K, 1.5% below current price, I mean, I don't know. I don't think it would go much lower. I don't think it would hit the bottom of this triangle. Making sense? And what else do we get? However, tradable edge to the downside. If Bitcoin does do that, and then I would wait till market open of traditional finance the next day. If Bitcoin overnight does hit this for a third drive down, and then comes up and starts getting rejected from this, forms lower high, and then takes out one of these lows right here. I mean, you're roughly in the same boat you are now, but that would be another tradable edge to the downside. But this structure right here, you start getting a really tradable edge to the downside once you take this out, but it's just not much room to go. So, I mean, that's less than 1% down to 19K. I just don't think it's worth it. Even though your edge would flip, I just don't think the risk-reward ratio is good, because the reward, my calculation of the reward probably wouldn't be that great. And Bitcoin's just going sideways. So let me show you that chart that I think could be the most important, potentially the most important chart of all crypto, and how I am interpreting it. And again, you're not going to see this chart anywhere else because I made it. And here we go. Put on the rainbow ribbons for some visual cues. So this is Bitcoin versus S&P 500. 130 days of total consolidation, which is the same as Bitcoin has, just normal Bitcoin price has been. It's the same thing. 65 days as a downtrend. So what this portion right here means, this red portion, and let me take off the rainbows now. So what this red portion means is every time S&P 500, or in general, every time the S&P 500 made some type of low, Bitcoin made a low slightly more aggressively. For example, from here to here, if S&P 500 had a slightly higher low than its previous low, Bitcoin made a slightly lower low during this time. And during from here to here, if S&P 500 moved up several percent, then Bitcoin did not perform well against it per its typical average. So I think the average that Bitcoin, I don't quote me on this, but it's somewhere close to 2.5x. So if S&P 500 moves 1%, if this chart is essentially going sideways, like the universal constant, or some universal constant, maybe not Planck's constant, but you know what I'm talking about, the litmus test, the baseline, Bitcoin often will go 2.5%, right? So during this downtrend, what this means is Bitcoin could have been going up the whole time during this from this point, from point A to point B, but S&P was too, and Bitcoin did less than 2.5x the movement of S&P. Does that make sense? So this doesn't just mean Bitcoin was going down that whole time. It had less aggressive highs versus SPX's move up, and every time SPX made a higher low, Bitcoin didn't make as good of a higher low or made a lower low. And if SPX during from point A to point B made a lower low, Bitcoin made a much lower low. But something changed right in the middle. You had 60 days of a fairly aggressive uptrend. And this is when, so starting at around this point is when SPX began making lower low after lower low after lower low. So take a look. And I'm going to get to the whole point of why this is important here in just a minute. So starting, about right here. So May 2nd, this is SPX. Lower low, lower low, lower low, lower low, lower low, lower low. Over and over and over, right? With a rally in the middle. So let's go to, is that roughly, or maybe it started here. It either started around May 2nd, or it started around August 25th. Let me see where that was. Second. Nope, it was the August one. Yep, so this is August 22nd. So my first guess was right. That's when this uptrend began. And you saw that during this time, S&P 500 made local low after new local low, which essentially are yearly lows, right? Because it's every local low is a yearly low for SPX now, right? But this entire time, Bitcoin held onto its lows. It has not gone under 17.5, which happened in June back here. So the S&P 500 was making lower low after lower low after lower low, and Bitcoin did not. It literally, I mean, just look at the freaking triangle. It held its lows as S&P went down and down and down and down. Not aggressively down, but it went down. Now here's why this chart is so important. The trend has changed. Back here, it bounced off of this line. It only took out one higher low. So oftentimes, you know, even on normal price action, Bitcoin versus the dollar, you'll see that a lot. Because there's a lot of liquidity, you know, people hiding stops and stuff like that. And it allows market makers to take on larger positions because all those stops form liquidity, or liquidation points form liquidity for them. Liquidity just means they can take on bigger long positions, for example. So you'll see this a lot on Bitcoin since 2019. Prior to 2019, that shit didn't happen because hedge funds and traditional finance did not have their algorithms hooked up to Bitcoin at all. And so that this is not horrible, taking out one low. But look, higher low, higher low, higher low. It has now taken out 2 higher lows and is tinkering with. Let's see if it's actually taken it out. It did. Let me make a horizontal line there. So not on a closure basis, but it took out that low. So it's taken out 3 higher lows. So the trend has, I mean, you know, you have a lower high. So high, lower high. And you've taken out 3 higher lows. So not only has the trend reversed, I mean, yeah, it has reversed, but fairly aggressively, all at once. Look at this. It just freaking, it honestly looked like it was consolidating to break out. I mean, look, even had a fake out up right before it went down. And that this kind of shit, so even though this isn't Bitcoin versus the dollar, this type of consolidation, fake out, breakout, then tank down, that also is a hedge fund / traditional finance algorithm thing. Trick other players, whether it's less sophisticated algorithms or just retail people, but it's the same concept as what I talked about down here. More liquidity. You grab the stops and the liquidations and then take it the other way. So you can load up on bigger positions if you do that, right? So what this means is this. And here's why this could be the most important chart in crypto. Remember, I began this video by saying 130 days or whatever I said at the beginning. It's roughly 130 days of sideways price action in a triangle. And it's just pure sideways. Like, how can we get a tip on when this shit is going to get resolution to the upside or the downside, right? Well, this is a fairly good indicator that it's much more likely to break down. Not only are we in a bear market, but it's a descending triangle in a bear market, which adds to the increase of it breaking down. But because Bitcoin is now under, or relative to Bitcoin's previous performance to the stock market, Bitcoin is underperforming SPX. If it stays down here or just can't make higher highs and higher lows again, if it continues going, if it does one of these numbers, then the next time SPX starts making new lows, which is inevitable. I mean, I don't think the bottom's in. That means Bitcoin, that is when Bitcoin will fall out of that triangle. Is new lows on SPX. If you don't see a change on this. So what could happen is, right when SPX begins making a leg down, this trend starts changing and it gets above here, and okay, Bitcoin holds on to its lows and there's just more sideways, right? Potentially. But this is a definite warning shot, and you won't find this anywhere else. And so we're going over this fairly heavily on my Discord. We just talked about this on my VIP Discord call. And again, links to the Discord with visual instructions on how to check it out in the description section. All my videos, the YouTube tiers, you can click join, the join button right below the subscribe button on my recorded videos, and a 90-second video will pop up telling you what they offer and how it's different than Discord. And then Twitter, make sure you follow me there. I post some bomb stuff on crypto. Cosas Verdes with the number 2 afterward. And the rest of this week, I'm guessing more sideways unless we get one of those, especially the initiator up. So the initiator up is what we discussed earlier. Bitcoin getting above the October candle. Actually, let me go to Bitcoin price. Wrap up here. Take a look. This is the initiator for at least a move up, not out of the triangle, but closer to the top, is you get above the October candle and this descending trend line, get above it, use it as support, then start wiggling back up. You make a uptrend on the 5-minute or 15-minute chart. That would be your initiator up. And to the downside, because that special chart I just showed you has broken the downtrend, your initiator to the downside is not this trend line is going to be key. So if you're an Ethereum fan, let me go. Yeah, I'm on the 1-hour chart, and this trend line goes back to the lows of September 21st or 22nd, depending on where you are in the world. And it's essentially forming yet another triangle. It's got a different kind of flavor to it. It's a different type of triangle than Bitcoin's got, but something to this effect. And that's only 30 days long. So you can see here, Ethereum broke down when Bitcoin didn't. That makes sense because Bitcoin's triangle is 130 days long. But it's not necessarily a big breakdown. It's just it moved up higher than Bitcoin did because of the anticipation of the merge. It was just a big frenzy bull trap, essentially. So Ethereum's situation is a lot different than Bitcoin's. However, it still has a triangle. It's got a nice trend line that is very playable. So resolution to either side, if you go back to, kind of make your own triangle or a trend line down and a trend line up, your resolution on Bitcoin. So, and you can also see that the end of this triangle is roughly at the end of October, right? But this is actually, this is a little, this is October 29th, 30th, 31st. Yeah, it's right at the end of October. So you have both Bitcoin and Ethereum essentially pointing to there could be a resolution around the end of the month or the beginning of November, and there could easily be a fake out up first, a tradable one to the upside and then it could break down after, like the second week or the end of the first week of November. So if there is a resolution up on either Bitcoin or Ethereum, just realize that if you're trading to the upside, when Bitcoin hits about 21K, that's when you need to get a little bit, a lot more cautious, even if you're trading Ethereum, as Bitcoin does that, because that's when it can easily, the trap can be done and it can all come crashing back down. Make sense? All right. That's the midterm picture on Ethereum. Let me try to show you what I think is in play here. I don't know if I have a lot prepared. I have it all set up. So this, the triangle's in play first off. What EMAs are rocking and rolling on Ethereum? I haven't been as interested in playing Ethereum because Bitcoin has just been, I don't know, I preferred Bitcoin recently. But let me take a look here. If you're an Ethereum fan. Okay, so this weekly 10 is potentially your target as Bitcoin approaches 21K. Before I confirm that, let me see from current price to there where it would be. So 7%, okay. So hopefully Bitcoin to 21K would be less than 10%. It's right at 10%. So if Bitcoin is at 21K and change, I guess I have 21.3, then Ethereum what you would see there, if there is a trap set situation, it would probably do a failure pattern above it. So for newer viewers, again, this is the time to hit the like button and subscribe if you're a new viewer. So I'm going to keep you in the know. So imagine, let's make that red. So a failure pattern means I think Ethereum would have a good chance of going above this, but when it comes back down, it makes a lower high and then breaks down. Something to that effect. Failure pattern of or at the weekly 10 EMA. That would be your target. But I would fully expect it to go above. I really would. And then when it comes down to here, I would be on lower high watch because it'll make a high as it punches through. And then you'll look for the retest, look for a lower high, and if it starts breaking down from there, that might be a good entry to take it the other way. Not financial advice. These are my thoughts. What you do with my thoughts is up to you. All right. But that's what I would be looking for, like a price path guess in the event of a bull trap later in October or early November. What could initiate that? So that's very tradable to the upside too, right? I mean, hell, like freaking 5%, more than 5% of play easily on that, right? Entering after it starts going up. So what would be a good initiator of that? Honestly, it might just be this damn trend line. It might be as simple as that. Yeah, I think this trend line would be the initiator of that. And so once Ethereum can get fully above here and use this as support, and once it starts curling back up, that would be your tradable edge up there. Is it guaranteed to go once that happens? No, but there are no guarantees in price. It's just you have to understand when do you have an edge, and that's when you have an edge. So even when you have an edge, like the house of a casino, they have an edge on all their games, but they pay out to their customers a lot, right? So that means they lose a lot, but over time they don't. So it's the same thing. And again, so when I say tradable edge, that doesn't mean, oh, Costas Verde said I sold my house and did 100x. Like, no, don't do that kind of stuff. It's a tradable edge. That is a winner over time when you have a confirmed, identifiable tradable edge in one way or another. And then to the downside, honestly, you have the Ethereum looks kind of easy to trade. You got pretty solid initiators both ways. And look how this accelerated to the downside, right? When it so bigger money is looking at this line. So once this 1 hour candle closed here, and then this next hour came up to get rejected, it really flew. Let's go to the 5 minute chart. Look at that. That was a So look, this is a perfect example of how I do the punch lows or the punch highs, but you got to take it out before. Like, this is what big money's looking at. I'm telling you, it's not the damn candle closures necessarily, but in this case, it was the 1 hour closure with the retest. The closure actually did get it right on this one, but you can always see it this way. So if you have a support and the support is broken and price moves up on that asset, you have a statistical likelihood of a lower high being formed. So here's a high. As it moved up, you knew you had an edge on a lower high being formed. And then you could enter somewhere like here or here after it starts coming down. Maybe even enter here. And in terms of your managing your expectations of that trade, you would not expect it to really heat up to the downside, in which you could then move your stops to like break even and then deeper into profit afterward. But your expectations on the timing is, or not just timing, but when to expect it is when this is taken out. And look how it worked. I mean, it was exact. And it's the same to the upside as well. You get a punch high, a retest. It's just inverse. So if you get above this guy, so let's say this is resistance, you punch through it, make a high, a punch. So I call that a punch high because that's when it punched out. Come back to retest, wiggle away up, and right here, right as it gets above that high, boom. That's a lot of times when bigger money will buy. That makes sense? Exactly it. So not necessarily a closure, because you're going to see this stuff on the 5 minute and 1 minute candles and all that shit. This is honestly this is literally perfect, but it happens constantly. And that's what bigger money, like that's when they really flood it, when that kind of stuff happens. All right. Here, it just punched right through. Look at that. They didn't mess around here. No time. It just took out it accelerated when it took out this high without using this as support. So it doesn't happen every time, but that's when it got above the trading channel. All right. So that is what I would expect to the downside as well. So upside or downside, you're looking for it to get above, use as support, take out the punch high, or go below, use as resistance, take out the punch low, and that is when you have significant tradable edges. And I already gave you targets to the upside. I haven't to the downside. So it's just this trend line. So in terms of like profit taking or when you expect the move to start bouncing the other way, and potentially reverse. Bounce is not the same thing as reversal, but I would take a trend line. Let me get rid of this up. So this trend line dates back to August 14th. Take a trend line like this from August 14th, and I'm on the 1 hour chart. So your downside move, that is where it would go. If it were to happen, anytime this month, punch through here, rejection, and take out the punch low and come all the way down here. I can't give you an exact horizontal because it's not a horizontal. It's descending. So I can't give you an exact time frame, but if it happens close to the end of the month, like I'm thinking, it's going to hit an origin line. So origin line is the most macro line you could possibly have because it goes back to the beginning of price. And that is around the low 1200s. If it happens soon, it's not that low. So it's the mid, see here from that point. It's only a 3% drop from the bottom of this. So I would draw that trend line because depending on when it happens, it might be a small move and come right back in the triangle, or it comes here. Let me zoom in. So if it happened anytime soon, you would expect it to come down here. If it took out, came below, got rejected, took out the punch low, you would expect it to bounce off this. And then once it got up here, you would start looking for a potential rejection for it to then just trickle back down. Just kind of bounce it on this line. Make sense? And that should get you through. So what I just covered on Ethereum, if you just put this stuff on your chart, so the descending trend line back from August 14th, the top and bottom trend lines of the triangle, and the weekly 10, that's probably all you need through November 1st. And it'll literally give you the guidance for both fake outs / continuation up or fake outs continuation to the downside, and specifically what to look for as price is interacting with this top line and the bottom line, so you don't get caught in a fake out like a wick above and you go long. Like no, you want it to go above, use that support, and then take out the punch high. So I've covered from micro to midterm timeframes through the November 1st. Hopefully this helps you in your journey with trading Ethereum this month. All right, XRP, then I'll get to questions. XRP is coming back down to my origin line, which it hit already and went into a failure pattern within the bottom of the triangle. So I made a video here. It was last week. It was my penultimate. So second to last XRP video, sometime maybe around October 11th or 12th. I mentioned why. Usually I like to long bottoms of ranges, but here I wouldn't, and I gave all my reasons why. I said it's more statistically likely to break down. I gave two major price points where it would probably bounce. One was here, which I can show you what it was. I put this on. And sure enough, it tried to bounce there. And it hit it exactly, like it was literally perfect. So even had you taken that trade, you would have been paid to be wrong because you would have moved your stops into profit on that. And then it hit my second target, my main target. I had two main targets. This one here, and it bounced from here. And then instead of getting rejected from the bottom of the triangle like I anticipated it did a failure pattern above. Failure pattern, again, for new viewers, means you go above an obstacle or above a resistance point, and then when you come back to touch it, you fall through. It's similar as a rejection. Similar. So this is actually, we have both. There you go. You have a rejection failure pattern, very, very common. Or a lot of times you'll get a failure then rejection pattern, but here it was rejection failure pattern. extremely, extremely common price action in all of crypto, oil, anything on Forex. Like it just happens a ton. So what is happening right now on XRP? Now that we've kind of got this going, what could happen is that it simply forms a bigger triangle. That could be what happens. That's the only, that's one of the major issues with, dealing with patterns is you just kind of have to keep redrawing your line, right? So if I would look at it, I would actually look at it like this. I would look at it from this standpoint at this origin line. And again, for new viewers, origin lines are only found on my channel and my platform. If you want to see what they look like real quickly, these are XRP's origin lines. And I have a tutorial within my Discord community on how to set those up, particularly on Bitcoin. And again, links to that are in the description section of my videos. So these are origin lines on all, and it goes back to the origin, the origin of price, right? So this is a major freaking line. And price could just ride it for an extended period of time until Bitcoin gives way out of its 130-day long triangle, right? XRP, though, does have the ability to move on its own without Bitcoin. However, because Bitcoin dominance is rising, so let's go to Bitcoin dominance. When Bitcoin dominance begins an uptrend, that means it's more statistically likely that any altcoin, including XRP, needs Bitcoin to go up in order for it to go up. So, this is a fairly decent uptrend right here. Hasn't broken it. Yeah, it's getting a small pullback, but it's just consolidating under one of these origin lines. This is a Bitcoin dominance chart. So because you have an uptrend, that statistically makes it much, much, much more unlikely that XRP will move without Bitcoin in either direction. Does that make sense? Particularly to the upside. Unless this drastically changes. All right. Well, let's go back to XRP. So with that said, we know that we're kind of targeting around November 1st, October 31st for a Bitcoin resolution. It's going to be on close. It could be before or just after, but sometime around this period here is when you're going to get resolution on Bitcoin. Thus, and because Bitcoin dominance is going up, also XRP around this time. So what XRP really could do is simply stay in this triangle until here, and whichever way Bitcoin and probably SPX go, so will XRP and Bitcoin. This might be what you're looking out for. And if you want to draw a miniature version of this origin line, a good way to do that is to go not back too far, but back to around, this is June. So June 12th, 13th. And then you got a spike, got a wick high here on July 7th. And then it scrapes all of this consolidation period before it broke down. That you need this line on your chart if you're an XRP fan. And you'll see there, let me make this a different color. Make it white so we can zoom out real quick. And look how important this is. Same white line. Look what happened back here. XRP was the first crypto I ever bought around, no. This was 2017. Yeah, I was, no, this can't be right. No, I was buying it up here. Yeah, I was going to say, I was buying it between 19 and 24 cents before it went up to $3. But anyway, regardless, look, that's the same line. So this line is a big ass deal. Do you see this? And I don't think you're going to see this line, I would guess not on anybody else's channel, in this fashion. To connect it to such a huge pivot point on XRP price when it exploded. How, like fucking 10,000, wow, 10,000%. That is insane. So this white line is extremely, extremely important. And that is why you're going to have, each time you have a test of it, I think that it increases the probability that this is defended with buyers. So you could easily get trapped in here because this will be defended. Plus, Bitcoin likely won't break out until somewhere in this box. So if Bitcoin doesn't break out, as Bitcoin dominance goes up, it probably won't break up either, and it probably won't break down. So I think it's highly probable that it's going to stay in this triangle. Now, let's go to normal EMAs, so I can throw on some MTF EMAs to give you a heads up on shorter time frame price action. You do have a bearish cross incoming. The daily 10 is close to crossing, so the orange going below the yellow is a bearish cross. Crossed here, big move down. Crossed here, massive move down, got like its whole bear market, right? You see that? Like, this is a big deal. Sometimes you get fake outs, fake out there, but it has a good hit rate. So watch out for this. But what could easily happen is that it just wiggles around and this orange and yellow line converge, or you get very, very low volatility. So if you're a person who trades EMA crosses to the downside, just realize that this is going to be defended with buyers. So just because this crosses as prices in here doesn't mean it's going to tank down instantly, right? Like it has a good history of doing on any asset. So just watch out for that, because this is going to be defended. A lot of people might be watching this. So I might not even want to use EMAs unless I'm doing micro time frame stuff. So if I were to see very small candles like the 5 minute get above the so this is the daily 21. If I can see it get above the daily 21, use it as support, and then start taking out the punch high, well, then maybe some micro, some very small trades to the upside. If that were to happen, something like this, boom, boom, take out the punch high right there, and maybe go for a failure pattern above the daily 10. And what would that get you percentage wise? Yeah, I mean, I'm only going for 2.5%, 2% plays, so that would be it. I personally wouldn't want to try to take it all the way up to here. I'd want to take my money and run more quickly in a sideways market, but I would go for a slight failure pattern above this after this happens. But if the price of XRP is below the daily 21, you can see that this is clearly in play. I mean, look at these tiny candles interacting with it. This is clearly like the line right now. So the daily 21, in addition to all this other stuff I've been saying, is kind of like your best friend for XRP. And after it gets above, it'll start interacting with the daily 10, which I have on the 1 hour 200, so it's smoother on small time frames like the 5 minute. You need these two EMAs, and this could easily get you through to November 1st. Just stuck in this triangle, use the daily 21 as your general guidance, and then realize that the daily 10 it could potentially trap price, keep it close to this origin line. It could just hover down here. But if you could break out above the daily 10, that would initiate a lot of buyers. So that would invite a lot of buyers, and then you'd have a second move up, right? But not until you get above the daily 10, this orange line, and use it as support, and then up. So if price of XRP were to go from here to the top of the triangle, it would probably be in a two-part type of move, right? So it would do something like this. XRP could make me a liar. Sometimes it just does it all in one swoop, and it breaks, traditional rules a lot. But that's what I would be looking for, because it's such low volatility right now, and that's XRP. All right, questions. All right. Well, I already made a Cardano follow-up video, so I don't think I need to. Record this one. All right, let's go to KDA. But before I open it, it's just exactly as I predicted, or exactly as how does it go? Exactly as predicted, or what? I don't know what it is. Something to that effect. All right, but it is exactly as I predicted. However, this was very, very easy TA, because we're in sideways movement, so I just had to pick the best guess for more sideways. Flash down. So similar to XRP's origin line, you have an origin line here as well. In my previous videos, I showed you how to draw it, but you have to zoom out to draw it. It doesn't hit anything else. It's actually the lowest origin line of KDA has already been taken out. But that's not, that doesn't mean it's horrible or over. Hell, Bitcoin is 4 origin lines below its previous bottom origin line, taking price action from late 2012 all the way. Now, if you take it from the beginning, the index of Bitcoin price, it's actually right now at the bottom one. But for all of 2016, 2017, all the higher lows, they hit the bottom origin line, and Bitcoin's 4 below. So relative to that, just going 1 below, KDA is not in that horrible shape. All things relative. But it is making new origin lines, and soon, your next move down will be roughly. If I can make this equidistant, just kind of eyeballing it here. That looks about right. There you go. All right, so once KDA. So look what's happening here. November 1st is here. And that's when Bitcoin will probably have a resolution. So it probably won't make it all the way through this triangle because Bitcoin will probably resolve somewhere around here. So when that happens, your next move down, it'll finally go under $1, as I've been saying it'll probably do in December. I've been guessing late November, December for a while now. There you go. It'll take a while to get there. So just because it breaks down doesn't mean it'll get there in an hour. Like it could, bounce all the way down and take 2 months to get there. Because from here to here, that's a month. That's over a month. That's a month and change. But it would just be a line parallel to the current origin line that it's on, and that's where it would go. And it would probably bounce from there. Would it reverse and go to all-time highs? No, but you're gonna get a significant bounce. Will you have lower low and lower high structure on the way down? Yeah, sure. That bounces on the way down, but here you'll take out multiple. You'll take out if it bounces here, if it bounces right here, when it does, it'll probably take out 2 to 3 local highs when you look left. So 1 local high, 2 local high, I guess 3 local highs. Yeah, I'd probably take out 3 of them. So from the bounce point, looking left, count 1, 2, 3. I would expect KDA to take out the 3rd. Maybe just swipe above then come back down, but that's kind of the rule of thumb. Whenever you get a nice bounce off of an orange line, you usually look left. You can do it on the daily time frame. Sometimes I only do it on the 1 hour, but I would look for it to take out 3 local highs before then slowing down and then continuing its path down. Yeah, this is KDA. It's stuck in a triangle and it's probably going to stay there. So your next playable move is when it comes down to maybe $1.22, $1.21 a change, something like that. But you'd want to keep an eye though, if it does find itself down here and Bitcoin looks like it might resolve out of the triangle, if Bitcoin's around 18.5, when that happens, probably not a very safe entry for a long. But if KDA can make it down there as Bitcoin is 19K or above, then I think you have, I would guess that I would have a tradable edge, not financial advice. So it just depends on what Bitcoin's doing when this happens. And then, profit taking, or it's probably going to get rejected from this point, right? Here, $1.37 or so. KDA. Exactly as predicted. Hey, Thurman, SHS. Yeah, that's a good question. I think you might be a new tier member, so welcome. So he asked, what percentage chance do I think Bitcoin will hit 20K before FOMC happens on November 2nd? I think the chance is pretty high, actually. Yeah, because so I'm gonna default to SPX on this. I actually think it could happen this week. I think it's well over 50%. Because even though SPX is getting rejected by the 1 hour 200, however, this 1 hour 200, actually I shouldn't use it on this chart because this is not a 24-hour chart. I shouldn't use that at all. It's really the daily 10 chart. and I think it's well above it. Yeah, so see that orange line is different now. On Bitcoin, it would be identical, but because this closes a lot, and Bitcoin never closes, and Bitcoin never sleeps, 1 hour 200 doesn't work on SPX or traditional finance. So, you had a nice, off these yearly new lows, you had a huge buyback, strong retest, back to this candle opening back here, and then two green days, with one of them being a gapper up with a decent closure. Yeah, the day started here, and the day ended lower than where it started, right? Because you can have a green candle on it. So it's a little different than Bitcoin. If that ever were to happen on Bitcoin, it would always be red 100% of the time. But because it was a gap up, it wouldn't turn red until it could literally, the day start here and it closed here and it would still be green, right? So it's kind of deceiving if you're not used to traditional market candle. But even though this is bearish green candle, but it's a green candle with a gap up, and within there you had a nice, it didn't quite fill the gap, but it retested it and was bought back before the end of the day. So all of those things combined, your next two obstacles are here, a trend line from local highs, origin line here, and here. So you have essentially a black triangle, and it looks like it's gonna go get it. I think it's highly probable that SPX pierces this black triangle. This week. And so remember that 2.5x type of deal? So let's say it gets just, roughly halfway into it. That's, let's just call that 4%. Times 2.5x is 10. So Bitcoin, 10% from current price. There you go. That's 21K. So yeah, I think it's highly probable. I'm going to put myself on mute just for a second here. Give me a quick second. Sound check. There we go. All right, here we go. All right. He also asked, do you think 18.6 to 18.8 is a good bumper if we drop there? Yeah. Take a quick look. Yeah, that's where I have my bumper right there. See that? I just zoomed in a little bit more because on a sideways price action, I don't think it'll quite get there in the next couple of days. But yeah, this is exactly where I have my next bumper down. Absolutely. All right, Papa Long Balls. Can you look at ALBT Alliance block? General thoughts on macro and some good bottom DCA targets. I'll do Quant here in a little bit. ALBT. And again, if I'm skipping over your questions, it's because I'm skipping to the questions with an emblem next to it, because those are my YouTube community tier members, and one of the benefits of being the community YouTube tier members during live shows, I I skip straight to your questions and I put them as priority. All right. And again, on my recorded shows, not my, I don't know if it's there on my live show, but just go to any of my normal videos that aren't streamed. And there's a join button right beside the subscribe button. You click that and it'll tell you what's going on. Wow. Well, this is similar to what I was talking about on KDA. Once you hit some type of point where you get a strong bounce, you usually at that point can look left and count back 3 local highs. 1, 2. This one's tied, so I'm not counting that as 3. 1, 2. You usually take out the third one. Put a horizontal here. Boom. It swiped it. Swiped the highs. That's pretty typical. So, I wouldn't chase these green candles. I think this is where it's going to have to slow down and pull back, or if it gets above, it's unlikely to stick its landing there until it, goes sideways for a little bit longer. Sometimes if you get the marketing team of a project to do stuff to, get YouTubers to bigger accounts to talk about it, it'll keep going and break that general rule of thumb. But I would, those are my general thoughts. I think it needs to slow down. Now, will it reverse and go down from here? No, I'm not saying that. In order to get back above here, you need to put some time here. It could swipe up and come back down, put some, higher lows over here, but what might happen is you make a 45-degree angle from the bottom, and it needs to fill out this area. Maybe not for a month and a half like this is suggesting, but something like this before it can go up. I would see some of this wanting to fill out before that's fully taken out. That would be my guess. Macro targets to the downside. Ooh, this might be too new for me to try that, man. Well, I wouldn't do necessarily 95% from the top because this is a really recent one. Oh, maybe I would. Shit, it's already hit 95% from there. I would say it's going to try to use this upper trend line as support, which still means it'll continue going down in the bear market, but you have a nice area here. And because it's broken out of it fairly aggressively, once it breaks down, it's got a pretty strong chance to, essentially the rest of the bear market, use this guy as support. So just connect all the highs here, and when it comes back down, just expect it could easily keep bouncing there, make, lower low, lower high, lower low, lower high. It could just walk itself down. And if Bitcoin ever had a capitulation move, then expect the bottom of that. There you go. Draw it like that. Put that on your chart. Man, it's at a really key moment right now. If it can get up and out of here, it's either going to hit here or here. It would initiate a pretty big move up. Wouldn't get all there in like a day, but it would probably hit $7. But right now it's still trying to deal with this line. All right, what all did you ask? Something about good time to pick up cake. So, in general, I wouldn't give you necessarily a price point, but because this one really could break up, I would say I will give you a general idea. Anytime that the point of control or the orange stuff is hit, that's not a bad time to try to pick some more up throughout the rest of the bear market. If you ever saw it at the bottom, that is probably a very excellent time to try to pick some up. So I won't give you an exact level. I would just suggest you draw this chart like I did. And I did this on the daily chart. Right? So this goes back to May 2021. Right before Bitcoin tanked from 55K to 29K. in fabricated price action. So yeah, draw this, and anytime it hits the point of control or the bottom is probably a good time. Honestly, you know, it looks like this could double bottom. Since it's had such a nice run up. Yeah, but this, and this double bottom probably would align with the point of control. So yeah, it looks like even if Bitcoin capitulates, this probably won't go too much past its all-time low here. But yeah, I will stick to that point of control bottom of that trend, of that channel. All right, Quant. Let's do a follow-up video on Quant. The last time I looked at it, I was thinking that it had a decent chance to get up to $180. I can't remember the exact level, but I gave breakdown points as well, and higher low targets to let folks know, hey, just because it goes down at this level doesn't mean it's breaking down, but if it goes below here, let's break down. So let's go take a look at how this is working. Ooh, it did hit it. Wow, it spiked past it. Son of a bitch. Okay, well. Wow. That is freaking beast mode. So this is the chain link of this bear market. So chain link last bear market went up. It like did 6x and from 2020 to 2021 or whatever, before everything else heated up. This is pretty impressive. Wow, it got above it and is using it as support. I would be on lower high watch. I would use the 1 hour chart. So, and I would use stochastics on this. Just straight, normal stochastics. This is how I would deal with this. Not stochastic RSI, but stochastics. So, I would use the stochastics to, on the 1 hour chart specifically, to gauge to try to add some guidance to my lower high watch. So the next time the 1 hour oscillator here, the stochastics go all the way up to the top and maybe start curling around. If price at that time, not before then, but after it's got to hit this top line, which is about 80 on the stochastics, and now has a negative slope. So hit that line and then form negative slope. If at that time this high is not taken out, then you probably have a lower high, and then when it hits the $1.80, it's probably going to break below and go down to $1.50. But if it has taken out this high, even by a peep, like by a little bit, by the time the 1 hour Stokes have hit the 80 line and gotten a negative slope, then as it heads down, I would either look for one more bounce of support, or even more probable, that trend line to be hit. So I would absolutely use my 1 hour chart with stochastics and this high. Yeah, these are all the tools you would need. This box here, this trend line, starting back October 13th, 1 hour chart and stochastics. And this should be able to get you, in the right direction here. It's going to be tough to take that out, though. Yeah, but if that oscillator does get all the way up. Now, if the oscillator only gets halfway up and then Quant turns back down, I mean, it could easily bounce here. But specifically, if it gets all the way up, then curls down, and this isn't taken out, then I would say, once it hits this, it'll fall through. But if it could take out the side on the next 1 hour oscillation up, then it heads down, it's going to hit this trend line. That's how I would play Quant. So I would say two major paths, if I can draw those out for you. This might be easier to understand, or just to visually kind of cue here. You could dip below, whatever. take out those highs, lower high, the stochastics, boom, boom. All right, price path number 1. So this high not taking out as 1 hour stochastics go all the way up. Price path number 2. If on the next oscillator up, and it, you could have some version in between. Like you could have it, the oscillator goes all the way up, curls down, and then it sticks a aggressive higher low, and then the 1 hour Stokes just go right back up, but they never go down very far. You could have that happen. Because it could consolidate here, then break up. And then once it heads down, as a correction, I would expect it to hit this trend line. Right there. So let's connect this bad boy to make this a different color. So watch out for that, though. It is possible that Quant just has a nice, strong 3 hour pullback as the Stokes form a negative slope, and then Stokes, like for example, like this. So watch out for that. Yeah. Kind of like it did over here, something like this. So they could curl down and it keeps going. So watch out for that. And those would be my 2 guesses on the most likely price paths for Quant over the next how many days? Oh, that's only 3 days? Well, shit. Well, there you go. For the next 3 days. Those would be my 2 guesses. Oh, super chat. Sorry. ALBT. Didn't I? Yeah, we just looked at this. And hopefully you've already seen this. General rule of thumb, when you have a nice, essentially a reversal pattern, is whenever you can identify, shit, this is going to be a strong move up off of lows, you typically look left, and you could often count. You'll either go to the bigger breakdown point, which is often 3 local highs back. So count. So off the lows, count back 1, 2. Don't count this one because it's equal to that one. 3. That's usually where you start getting the nice pullbacks. After you swipe up to the 3rd local high or the breakdown point, which is what this was. Right? Broke down from here. And that's where people sold. It works for a lot of Bitcoin. I mean, hell, it works for Bitcoin on the 1 minute chart when you have like strong 1 minute moves down. It looks the same, but on the 1 minute chart. It looks very similar to this. So now that it's hit that, I would assume it's going to pull back. This could be among the more valuable free tools on TradingView. Projector tool. Draw roughly a 45-degree angle. And then look at horizontals here. I would guess that price will find itself in the intersection of this projector tool and this horizontal, literally here, where it intersects, where these two intersect. It could easily stick its higher low landing, but I think it's going to go down. I think it's got a good chance of going down there. What could easily make that guess wrong is if this is being pushed by YouTubers because the marketing team of this project are having YouTubers talk about it or whatever. That would, make this not happen, but I would probably look out for this to happen. Right here, going back to about 6 cents. That's probably a pretty good guess. And it might take a while to do it. Shit, this could go sideways and down for like a whole month and a half. So watch out. I'm on the daily chart. However, to be on guard, I would say its current high, that will end up being wrong if this, just honestly, this is kind of a line in the sand. It hit it perfectly. If this price can consolidate under here, keeping higher low structure, then it could easily bounce higher without touching that point. Or if you have a nice move that you punch through it, pull back and use that support, and then start working its way up. So not at this point, but this point, the third point. At that third point, then I would invalidate what I said earlier. But even if it does one more spike up, I would not invalidate that. I would still guess it's going to hit the level I put down there. And even at this point, before it bounces on that light line, I would still guess that's going to be hit. So this could easily have juice enough for one more thing. The question is, can it stick its landing on that line at 10 cents and change? But I don't think this target would be invalidated or become extremely improbable. So invalidation, let's define that as like in that instant, in that moment, it becomes extremely improbable. I wouldn't label it extremely, and I wouldn't label this target extremely improbable until that happens. Specifically, the three steps there. All right, near protocol. I haven't taken a look at Near Protocol in a while, so let's go dive into this bad boy, see what she's doing. I think, though, this has been a good one to continue to short on lower highs, if I remember correctly. Yes, sir. This is having a major... Oh, boy. Yeah, it already took out its lows, so it just made new yearly lows on the 12th of October. This isn't good. So it's a similar 130-day, triangle-ish. So 130 days, just like, oh, I'm big. All right, so this is a 130-day consolidation similar to Bitcoin. But Bitcoin has not taken out its yearly lows, which is 17.5, probably on the same exact day, like June 18th, right? June 13th, 18th. Near has taken it out. So if that's out, any move up, you statistically expect lower highs. And what has happened? Lower high, lower high. However, if it does start moving up, I would refer back to the breakdown point. I would say it would very likely, if it does move up, it would very likely get rejected by $3.44. That's going to be really hard to get over on first try. Like, it's very unlikely to get above that on its first time touching it. Just a heads up. Since this has taken an aggressive leg down, I mean, it might want to do that. But for your next big move down, perhaps when Bitcoin breaks out of its triangle, I mean, really, just make a line from the yearly lows, and you can look at the difference here. Watch. When it went below here, look, it did not go below, then get rejected by this line. You see this? Went below, lower high. Went below, lower high. Use it as support. Higher local high. Went down, straight back to the line, never got rejected. So you could tell from here this line was being defended, and the bulls were winning that particular battle. The bulls aren't winning the war, but they won that battle. And you could tell they were winning before they won it. Because every time it approached this breakdown line, or this line, it never got rejected once. It actually tried to use it as support a couple times. So before you say, oh, it went below that line, I'm short on 100x. No, not necessarily. You want to see price go below. So I'm on the very small candles, like 5-minute chart. I don't know about the timing. It could be near the end of this month of October or beginning of November. And it's possible that $3.40 target's hit before this happens. But whenever it hits it, no matter what happens between now and when it hits it, what you're probably going to see is when it goes below it, you might have another defense, it might get above it again, but at some point you're going to get rejected. And then if you start making a new local low like there, at that moment right here, when that low is taken out, or especially the punch low, when it punched through, something like this. When it takes out the punch low, that's when it's going to accelerate down. But most likely only after a rejection point. And the probability of it behaving this way is even higher than is typical. And it's got a high, price of any crypto has a high chance of doing something like this before it breaks down. And you have to go to the small candles though to see it, like 5 minute. But because this line was so defended, earlier, it's going to be defended again. And before those defenders give up, you're going to see a rejection point and then take out the punch low before those defenders give up. And some of those defenders will either just sideline themselves, and some of them will flip bearish immediately. In addition to the people who were trying to get it below, they'll sell harder or continue to sell at the same rate, and therefore it'll accelerate down. Because the vector of force down will just get way bigger than the vector of force up at that point. And that's what I would be looking for. So, but before that happens, it easily could go test. What was that number? $3.44. And even if it does, when you see it get back down here, it'll still behave the same way. It just hitting this doesn't mean it'll do something different. It'll do the same thing. And that's a lot of freaking wiggle room, folks. That's a 16% move. So there's a lot of stuff going on here. So I would not get antsy about a big short until I see that happen. Now, if this is never hit, and hell, this local high is never taken out, and then it sooner than later uses it as resistance, I would still say that once it's resistance and takes out the punch low, it would still be a very tradable edge to the downside, and it would probably, hit a trend line. Downside target would be about here. So get rejected, then comes down, 16% move. There you go. All right, I'm going to have to wrap up. Origin line for Cardano. Well, what might be just as important for Cardano is this macro trading channel. Actually, I don't think I have origin lines for Cardano. Uh-oh. I don't have them set up. Shame on me. But what could be just as important, if not more, more important technically, is this. I'm on the daily chart. This guy right here. So I guess technically it is coming to an origin line right here. So what I do have on Cardano is hey, Ottoman. Yeah, Ottoman just used a small portion of his profits from the Ethereum trade of this morning. Trying to eyeball this to keep all this shit equidistant. So it went past this origin line just by a little bit. There you go. There are your origin lines for Cardano. And then your macro channel on top. So these two things together will give you some damn good guidance. So it looks like Cardano's due for, once it hits, assuming Bitcoin is at 19K or above, if Cardano hits around 32 cents and Bitcoin is not below 19K, it's going to get a pretty serious bounce from that level. And it would probably go right towards that wick. And again, that would be a 50, yeah, it could be a big ass move. Man, what did it do last time it hit? So from here, yeah, that was the 60. Yeah, last time it hit, it had a 60% move off the last one. So yeah, I would say it could easily go up to 48 cents off that. Yeah, that would be not financial advice, but that could be a fucking hell of a trade. If Bitcoin allows. If it hits here and Bitcoin is breaking down below 18.5, well, then it ain't going to happen. It's probably going to go down to the next one, dive down to 20 cents, also to the bottom of this channel, right? See how that line intersects here? It could get destroyed too. It doesn't have to bounce there. But if Bitcoin allows, and at that time when it hits around 32 cents, if Bitcoin's strong, it could be a freaking serious bounce. There you go. And I should have recorded that. Yeah, that could get hot. Craig thinks Quant could go to 100. Yeah, but it's going to take a long time to get to 100. I mean, Quant is not going to be at 100 like this month. It's going to take a while. You got a lot of support. Well, yeah, I could see 113, 115, 113 being hit. You got a lot of bounce points between then. It would take a long time to get there, actually. Maybe like 3 months. Because you're going to have to break this guy, this guy, this guy, and that guy to get to 100. It would potentially be, I would say, next year before it's under 100. But yeah, I gave you my thought process on Quant over the next 3 days. So let's see which one it'll play out. Matic's price action has been pretty weird for the way I like to do things. I'm not going to record this because, and I'm not going to cover it like full-fledged because it's pretty sloppy right now. I've seen some pretty good, some of my favorite trading accounts on Twitter who are having a ball with this, but the way my eyes see things, to me, it seems sloppy. And I would prefer not to trade it. And I haven't been able to look at it and make a lot of sense of it outside of my origin lines that obviously work, right? I mean, this line was here before it hit it. This line was here before it broke down from it. I mean, it's in some type of descending consolidation. Actually, that might be what I was missing. All right, maybe I will record this. Trying to make sense of Matic. Seems to be in a descending, slightly sloped descending trading channel, and it's right at the top. So let's go ahead and dive into this bad boy. All right. This descending channel, I'm on the 1 hour chart. If you want to try to copy this, absolutely feel free to do it, because this is what's getting price action right outside of one bull trap. This goes back to July 18th, right when Bitcoin was making its lows. What? This was going up as Bitcoin spiked down? That's weird. I didn't know that. There must have been big ass news. My goodness. Oh, that's July. No, Bitcoin made its lows back here. Never mind. I thought it said June. This goes back to mid-July. And it's been in this trading channel ever since. So if it breaks out of here, knowing we already see that my origin lines work pretty well for this, right? The next origin line here is probably going to stop it. So even if, it breaks out and goes up, you're going to have fairly immediate resistance somewhere around 10% above. So if it were to break out of here soon, within this month, you're looking at around 96, 97 cent target. But that is not going to be initiated until this line is taken out. So it's not just one number because it's descending. So the number changes there, as you can see. So, I mean, heck, it could come down all the way to here first and then break out here. And then, the longer it takes to get there, this is going up. So it would actually have a bigger run the longer it takes to get out. So yeah, it's just this top trend line. And because you've already had one bull trap that I showed you, that greatly increases the chance. If you zoom in on the 5-minute chart with that trend line, before a lot of buyers are confident enough to really wing it up, what you're going to have to see is you're going to have a punch high. So you're going to see that yellow line, or that green line, you're going to punch through it, come back down and check it, maybe swoop under, work your way back up. Something like this, bounce on it. And the buyers are not going to really be invited to buy heavily until that punch high is taken out. Like something like that. And at this exact moment, right here, when it takes that out, that is when it would probably really accelerate to the upside. Because there was already a bull trap above this. So people are going to be hesitant. They're going to wait for that. Like big bear money will very, very, very likely wait for that to happen. And if you see this punch high, just realize it is very easily likely for it to break back down in here until the punch high is taken out. So be careful with this line. There's already one bull trap, and that will specifically make buyers hesitant at the first pass. And it greatly increases the chance you have to take out the punch high before it accelerates up. And until that punch high is taken out, I still think it would be more likely to do a failure pattern above and then come back down, then break below this line as it retests it. Until the punch high is taken out. All right. Well, Adam, you can always go back on the stream. Yeah, I follow. I'll end with Tesla on this one. Okay. A crypto guy covering Tesla. I look at stocks a lot because Bitcoin moves. Honestly, if Tesla ever had an independent 10-day up, right, Bitcoin would go up off of that as well. I've seen it happen with an Amazon candle. It was an 18% candle when market closed around. It was 4:30 or 5:30 that day. The next 1 second, Amazon went up 18% and Bitcoin went right up. So I follow stocks pretty heavily. So especially the big ones. So let's go ahead and go to Tesla and let's have a crypto guy take a fresh look at it. Here we go. I'm going to start with the week. And I'm going to get some perspective here. This is 2011, so this is all of price history. 2011, current. Wow, 29,000%. That's ridiculous. That's like a freaking altcoin, man. Even though an altcoin would do this in 3 months, and many did in early 2021. This took like a decade, but still, that's pretty crazy. Now let's go to the weekly 10 and the weekly 21. I'm going to take off price. So when these cross, it a lot of times sticks its landing. So that cross actually historically doesn't mean a lot for it. So that's not going to be extremely useful. However, I want to see where price is relative to those. Let me go to like the 4-hour chart and keep those weekly EMAs on. All right, immediate price action. I think it's going to try lower. I think it needs to hit this box first before it has a chance to take out this high here, back from late September. I don't think that high even has a chance of being taken out until this box right here is hit. And if you want to see this visually a little bit differently here, let's go to here. Take off price. Yeah, you have the rainbow or ribbons crossing down, and they're crossing below the gray line or the wall or the dam. So this is immediate pressure down for sure. Let's look at the daily ribbons. Fresh cross. 1 hour. What's price doing in the 1 hour? Oh yeah, it's gonna hit 188 or lower. 188 or 168. You have a pretty serious bounce off there, but I think it has. Yeah, I think it's destined to hit that first. That's my first layer of analysis. Let me take a look at this bad boy on the daily chart to see. So this is where, if any traditional people are watching me do it, this is the part you'll like. So what I'm doing is my thing, and you're not really going to see anybody else do it. And I call these origin lines. They're equidistant and parallel, and they hit tops and bottoms really, really well. And guess what? They continue to do so. All right, now let's see if we can identify anything different here. Oh, look at that. Yeah, it's gonna hit that and bounce. It probably isn't gonna hit 168. Yeah, it's gonna go around the mid 180s, and after that it'll probably do a lower high, but it would have a serious chance to then come all the way back up to 287. That'd be a big move. It'd be a 54% move, but yeah, it's probably gonna get a strong bounce with the assumption that Nasdaq futures are not getting stuck below line A here, which I've had these lines here in this target here for months and months and months, right? I've been thinking it's ridiculous. People think Jerome Powell's going to pivot and the stock market's going to go up, because line B is going to be hit with an extreme probability on Nasdaq futures. And the whole stock market is not done going down. Nasdaq is going to hit around 9,000 or lower, maybe even 8,600. Yeah, between 86 and 9. It's simply going to happen. At least the futures are. Spot might bottom out at 91, 92, because the numbers are a little bit different. It has a chance to, at least. But Nasdaq futures needs to hit 9 or lower. So if at that time, I would use this composite. If the composite Nasdaq is not stuck below this line, at the time Tesla hits that 185 marker, that origin line, then it's got a very high probability of bouncing. What will reduce the probability of Tesla bouncing is if this chart is under this line and has used it as resistance. Now, there's a middle ground of gray. What if this is below it while Tesla hits it and it has not used this as resistance? Well, then you're kind of in a 50-50 kind of no trade zone, or trade very carefully with tight stops if you're trading Tesla. But that would make it kind of a coin flip type of deal. Probably worth trying, because once it goes below here, it's probably going to want to race up, to poke its head above it, do a failure pattern, then rejection, and then head down. So it would still, even if it doesn't end up being a huge trade, I think in that event, it's a coin flip, the coin flip scenario, not the rejection scenario. I wouldn't try it then. But if the coin flip scenario, I personally would probably try taking that trade if I were trading Tesla, and then just be very aware of what this chart is doing, and realize once it pokes its head up here, that's the time to put your stops in profit, and maybe take some profit off the table before your larger profit points are hit on Tesla. And again, one more quick view at Tesla here. There you go. Yeah, around 185 target. And the bounce could go as high as 283 if Nasdaq futures permits it. Almost 2 hours. I got to get going. I will see you on Thursday at 6 p.m. New York time. I believe that is 1 a.m. or no, that's midnight Berlin. No, midnight London, 1 a.m. Berlin. And that's 3 p.m. California time. We'll see y'all on Thursday.